Hey, everybody. Welcome to Steve Couper's podcast for aspiring real estate investors. In each episode, I bring industry subject matter experts and other investors that are willing to share their tips, tricks, and knowledge with you. So for today, before I go too far, I'd like to remind everybody to hit the like button. Please make sure if you haven't subscribed already, let's click that button. And if you really like what you're watching, let's share it with your friends, please. Okay. So for today, I'm bringing to you an entrepreneur and success coach. He is known for empowering teams and transforming education through operational leadership, coaching, and experience-driven programs. I wonder where I got that from. He's also a real estate investor, which makes him near and dear to my heart. Ladies and gentlemen, please welcome my friend Mitch Parmasar. Welcome, Mitch.
Steve, thank you very much. I look forward to diving into this world of real estate with you and your viewers today.
Yeah.
I must say though, compliments to you on doing this work. This is really much needed. Because again, transmitting this education is really important to the masses of people that we can touch. So I'm pretty proud and happy to be here as your guest.
Yeah, I'm so happy to have you. It's been a long time since we've had a chance to connect, and I look forward to sharing some of your knowledge with the viewers. So thank you for joining. So, Mitch, why don't you tell us a bit more about yourself? Why don't we start off with that? You get to share the stage and tell me more about your journey and how you got to be where you are right now.
Absolutely, thank you for that. So, Steve, I've been in the real estate space for well over 20 years as an investor. But like most people, I started off as a part-time investor or an accidental investor in the real estate space. And this is back in the days you didn't have communities and you didn't have this network to be able to really learn and grow from each other. But my wife and I, we both loved the space. So we started off, basically moving from renter to homeowner, homeowner to investor, and investor to business person. And that journey took quite some time. But as we grew and we evolved, it was amazing to see that we went from pre-construction homes, doing it time and time again with townhomes, single detached and what have you. And that we thought that was the world. But then as we continued to learn and grow, we got into more creative investment strategies, getting into the multifamily space, the apartment buildings, five plus doors, getting into development, doing office to residential conversion, and then getting into the more complex nature of different structures or corporate structures in order to facilitate the investment journey. So we've been here for a long time. I also do a lot now. Not only do I bring or work with investors directly so that we can buy and build and grow, but I also run a training company where we help people design their business and basically set them up for success so that they know exactly what strategies they're working on and what that business planning would be like so that they know exactly how they're going to achieve the results and the success that they want. And that has been a near and dear passion for me. So I love doing that. I continue to work in that space, and I love seeing the results. Absolutely love seeing the results that people get out of taking on this journey. It's a small world when you think about it because we cross over with so many people that have known each other. But again, it's just a journey. It's a road that if you really want to get into financial freedom and you're prepared to do what it takes to learn, to invest in yourself, and then make those strategic moves so that you can grow and get to that level, this is where it is. I mean, we're experts in the sense that we understand the real estate market. There are many other options that people can choose to build wealth. But if you're looking at the real estate space, then definitely there's going to be value here today.
Absolutely. Well, I love this. This is right in the heart of what I love talking about the most. So, thank you for that, Mitch. So, tell me, let's start with market. So, where are you investing currently? Where do you see the right market to be putting your time and money into?
This is an interesting time because when we look at the Canadian market, obviously your major market it would be places like Ontario, because of the sheer economic diversification and population. But then you have other great markets across the country. You know, Alberta, you're looking at BC. Now, Saskatchewan, Manitoba seems to be interesting. And then the Atlantics has been interesting for the last couple of years for sure. But again, you're seeing a mixed bag of slowdown. The industry as a whole seems to be, in a flux. There's uncertainty,
Yeah.
and then we're not going to talk about it because everybody's talking about it. But the uncertainty created because of the trade disputes or the trade situation with the U.S. market has basically put a lot of people on pause
Yeah.
with a lot of uncertainty. So right now, the markets are definitely much slower, but again, I'm still looking for deals and opportunities, mainly focused in the Ontario market. I also like a couple of places in the US. We invest in Florida. Looking at getting into Texas and Arizona as well because I think those markets might be smart. But again, like everybody else, I have a bit of uncertainty now.
Yeah.
Not sure whether we move forward or what do we do because of the climate that we're in. But within the Canadian market, I mean, you have Ontario is still a very smart market in the right with the right deals. Alberta has been incredible the last couple of years because it's been steady growth, not crazy jumps in the market, but a little bit of slowness now we're seeing, as of let's say June 2025, but still healthy enough to make people money. And the rules and the regulations in Alberta, they seem to have gotten it right on the housing side, where we have a balance between uh, tenants respecting tenants' rights and then respecting landlords' ability to run their business at the same time. So good on that province for sure for doing that. I think it's a good example for the rest of the country to follow. But again, these are just smart markets, smart people are running it. And across the board, it's always about the right deal, it's always about the right deal. So when we look at the economic factors over the long range, the next 5 years, 10 years, 15 years projections, then you can really say, okay, I'm looking to invest in this space. Now, I want to qualify the types of investment I'm talking about here would be on the multifamily side.
Yeah.
Residential is a different game. Land development is a different game. But projections and outlook on the multifamily space, it's pretty much a done for you program in the sense that you can calculate out where you think this will be. And I think that's one of the cool things for investors is that it's not an emotional play. It's a play behind numbers. And so you can make guesses that would actually be substantiated by analysis, by past performance, and future projections.
I love that. That's exactly it. I love the idea that it's not about the neighborhood or the house next to you and what they sold for. It's really a business you're buying, and you're buying it. The value of that business is based on the numbers. What's the income and what are the expenses? That helps you know what that property is worth. Yeah.
You got it. That's absolutely true.
Yeah.
So, the one thing you got to do when you're coming into the space of multifamily, you really have to spend that time to get to know how you look at this business, what's the underwriting, how does it perform? Because, this is a space where, yes, you can make a lot of money. And even I have a couple of programs where we show you exactly how you could literally gain $1 million or more
Hmm.
depending on the right buy. But at the same time, you got to have it properly calculated out and know the risk and the rewards before you step into that zone. So if you're coming into the multifamily space as an investor wanting to get into the space, I would say find people that you can work with so that you could learn from them in terms of the underwriting. As they always say, the money is made in the buy, right?
He's made in the buy, absolutely. So you've touched on it a little bit. So we talked market. You talked about the asset class that you like to deploy. How about strategy? What's your favorite strategy for multifamily properties?
Well, strategy again, it's reflective of what do you want to do? What do you want to get out of it? So I'll give you a framework for some of the people we work with, what they do. So I have some of them, they're very much interested in putting their money to grow over the long term. So they're looking for turnkey properties.
Yeah.
They know that as tenants turnover over time, it will grow in value, and it's a slow and steady pace. But it's usually because it's a turnkey property. There's no major renovation issues or maintenance issues. It's basically steady as she go and let it grow. A lot of these people is because they're making some pretty decent income and they're not prepared to give up their job to come into the space. They just want to
Yeah.
have their money working for them better than it would work in the bank or in some institution where, sometimes it goes up, sometimes it goes down, and over a period of 20 years, they're averaging 5-10% on their money. Long term, not the greatest strategy, but if you have nothing else, then that's the way you will go.
Mm.
The next level behind that would be your value adding properties. So this is where if you are prepared to come into the space full time, or you have a team of people that you're going to be working with that can do the value add. And let's talk about value add. So, what is value add, Steve? Well, I'll tell you. It's really finding the opportunities in the building. Oftentimes, people have the perception that it's a big renovation. I got to go in, I got to clean it up. Sometimes it's as simple as maybe the basement has never been utilized. You call the city, find out if they will allow you to add units in there. You might have to do a bit of underpinning, put in some windows, but it might very well be possible. The other thing is parking, cleaning up the parking lots, putting designated spaces, and charging for that.
Mm.
Sometimes you might have opportunities for simpler storage, right? Where you put that in. Now, one thing that a lot of investors have been doing for the longest while, because it's usually the easiest thing to do, you go in into a building that needs value add. Is there washers and dryers in each apartment? If not, can I put that in and then upcharge on the rent? Most tenants would be happy to take that. So that's a time tested one now. It's been running really well for several years now. People often, that's the first thing they look to grab on a value add opportunity, right? Then you can get into the more complex area where you're renovating the apartments. Maybe you're talking to tenants to get them, if they're really low paying tenants, maybe you get them into a different property or a different house or move them around. Of course, you'll compensate them for that. And then you optimize those buildings and bring the rents up. So value adding is really the fastest way to the biggest dollars. Uh, turnkey is basically steady as she goes. It'll grow in value. You'll be very happy in 5, 10, 15 years' time. So those are the two primary areas that we look at, Steve. And again, when you're in the business full time, you'll tend to have a mixed portfolio, but you may lean more towards value adding simply because the one other beautiful thing with multifamily is you can determine what that future value will be when you raise the rents this
Yeah.
particular dollar. It's like you say, on the residential side, it's not what your neighbor's house is selling for, right? This is what you're doing with a building that is going to be optimized and make your long-term investment pretty solid.
Yeah. No, it's magic, right? I think it's really magic. It's not foolproof though, is it? I mean, when you're looking for a property, the sellers are going to give you their pro forma. They're going to tell you, hey, this is what it's worth. But
Absolutely.
but sometimes they might have omitted something, or they might be embellishing the or be overly optimistic in their numbers. Don't you find?
Well, it's an interesting stage of the deal,
Yeah,
because typically it's a bit of marketing, right? You have your agents, they want to get eyeballs, but more importantly, they want to get a phone call or the email back from you.
yeah,
They want to get some level of engagement. So, you know, I would say it's probably a marketing approach or a strategic approach where they don't give you all of the information up front. So now, if you're really interested, then you'll make the call. Then you'll ask for the performers. And even when you get the performers, you have to have some level of capability to go through those numbers and understand exactly what they mean, because and what is missing. Because you're right, Steve. There is always the what is missing,
yeah,
right? And so it's just a part of the game, which is why most people that you speak to, if that's doing this business, they'll tell you find a mentor, find somebody who can help you develop, simply because there's just too much risk when you miss something, right? And the science is not foolproof. I wouldn't get into the complexities of cap rates, but cap rates can move. It can go up or down depending on market situation,
Mhm.
and that's at an industry level. So you could buy, let's say, in a five cap market, the economy is slowed down. Things are more difficult now as we're kind of seeing we're heading there. You could run into maybe that market switches over into a six cap.
Yeah,
That's a material impact on your value creation or your valuation of that building.
certainly.
But the investor might say, well, Steve, what the earth is cap rates? Different story altogether. We'll have to spend a whole week on that.
Yeah, yeah,
But the point is, you got to anticipate, some proximities around how do I plan for something potentially like that.
yeah,
Because again, you got to remember, buyers want the lowest price, sellers want the highest price, right?
yeah,
And so we're always forcing that. So I'll say that again. Buyers wants the lowest price, sellers wants the highest price, but there is a price somewhere in between there. And if you cannot come to what is a fair price, then there's no deal to make. Because the last thing you want to get caught up in is getting into a property that you've overpaid for, because the multifamily space, it's not very forgiving in the Canadian market. And what I mean by that is it's not easy to raise rents in most of the provinces.
right.
Alberta is probably your only exception,
And
where
Saskatchewan.
and Saskatchewan to a point. I think Saskatchewan still has some rules and regulations around it. But at least after the 12 months, you can still do something. And that's a major difference, because at least you could still have the opportunity to let's say be a little more forgiving in those markets, because you can catch up over time. But
Yeah,
if you're in an Ontario market, you're waiting for the regulations to come and tell you what you can do, unless you're like built from 2018 onwards, or end of 2018 onwards. Then it's okay. Then you have a little more flexibility. But the control markets really adds another layer of complexity that you have to be aware of. So the first layer is, how do I deal with the seller? How do I know, or how do I validate that these numbers coming to me are true, that they're complete, that we didn't miss anything,
yeah,
right? Those are important. That's why in this space of investing, you always have a due diligence period,
yes,
and that is simply because the players or the investors in this field, buyer, seller, agent, broker, everybody knows there needs to be a window of time for validation.
yeah. So,
And even within that window, you still got to make sure that you're doing it properly, simply because if it's missed and you go into a firm deal, then it's your deal,
yeah, yeah, that's
right?
it.
And even if you try to get back or correct something, you're talking litigation, lawyers, time, so getting it right and that due diligence period is really, really important. But when done right, sky's the limit, right?
There you go. There you go. So you're right. So when you've got an offer that has been accepted, you've got the property now under contract, you get time to do that due diligence. And that is a review of all the documentation, right? And after you accept that, you accept the paperwork and you found and maybe you negotiated a bit more, you then enter into a period where you get to do your inspections, right? You get to actually spend some money and get people out there to do property inspections and environmental inspections and so forth. So it's not the same as somebody buying a house where you pick up the keys on Tuesday. This is a long, or can be a long drawn out process. as you've got review of documentation that takes a period of time, and then thorough inspection of the property that takes a period of time in order for you to reach a satisfactory conclusion and say, this is something I'm willing to actually, I'm willing to buy. I,
Yeah, totally. I mean, the due diligence period, it multifamily is not a quick game. Yes, you're going to be in it for quite some months. Some of the due diligence period, depending on the size of the building, can run you 30, 60, 90, 120 days
yeah,
before you even decide to go for them. And even within those uh, periods, sometimes you might need an extension.
yeah,
And most times, sellers will give it to you because they're already engaged with you, right? Of course, that's not qualifying anything because it's all negotiated at the end of the day. But you're right, Steve. Some of the things that I always want to be careful of or try and understand is your property condition is critical.
yeah.
You really want that identified. You're talking about, large ticket items. You want to make sure that the inspector is, first of all, a qualified inspector for multifamily. Don't go taking my friend who's doing houses every day and he's a good inspector. That's not his expertise. Don't bring them into the mix, even though they might be good friends with you. Find multifamily inspection companies. It also goes a long way with your lenders. They look for institutional inspections and they know the companies because it's a small space, especially in the Canadian market. Like we're tiny in front of the U.S. markets when it comes to multifamily buildings, apartments, and complexes. So you want to start that right. The other thing is you mentioned environmental. Yeah, there's sometimes you're not necessarily required to do it. The banks may say, look, it looks like it's in a safe residential type environment. We may not want it. But since you're get taking it, it's probably worth looking into or getting it done simply because if you decide to sell the building in the future and the future buyer wants to get an environmental done or that lender wants it done, anything shows up, it's now your problem.
That's right.
So,
That's right.
so
It's
you
a
have
liability thing as much as anything.
exactly, that's right. So, it's worth spending a few dollars up front. And again, this is money that you're spending to make sure that you're not going to spend even more. So, you're buying a business, you're in business when it comes to the multifamily space. You're not buying a property because a home because I love it. It's because this is spending money or investing money to make money, right?
That's right.
You are providing homes for people. We got to remember that our tenants are looking for homes. But if they do right with the building and you do right with the building, then both sides of the party will come out winning.
Somewhere in there, there's a win-win-win-win-win kind of scenario we've got. I heard it all. Tell me, so the other thing that you mentioned that I think is important for people to understand, when you're applying for a mortgage for a multifamily property, it's not something that's necessarily going to be ready in 2 weeks' time either, is it?
That's why you have such a long due diligence period because you're right. Everything takes a lot of time.
Yeah,
Like we just talked about the inspections, that's one thing. The environmental is another thing, but the financing, that condition needs to be waived before you can move forward on anything as well. And yes, if you're working directly with the banking institutions, then yep, they will also go through some rigors. They want everything tested. You got to remember that the lender is taking risk. And while we say it's secure against the building, they want to make sure that that building is worth what it's worth.
yeah,
Because they're believing in you, yes, but the numbers need to work. And so the amount of validation, imagine you're buying a 24 unit building, which is not a crazy big building. That's a decent sized building, but that's 24 apartment that needs to be validated. Leases, tenants, conditions, right? And then there's the expenses side, and then there's capex side. So lenders really do a thorough as in-depth analysis on their side for risk mitigation.
yeah.
They really want to know that they're not taking on any risk that's unforeseen. So it does take time, and that's why I said, sometimes you're gonna go get an extension. You're gonna say, "Hey, Mr. Seller, I need another month,
Jeez, yeah,
they're going to flip on you, and then they're going to come back and say, okay, yeah, let's do that. Why? Because the guy who's coming in after you, if you left the deal, they're in the same boat.
yeah,
They're gonna have to get the same diligence, the same waiving. I haven't met anybody who's buying cash for multifamily, but hey, you never know, right?
you know. So there's something else in this in the mortgage application I think is important to talk about. When you're buying a home or a residential property, 5 units or less, the bank is looking to you for your debt service to be able to determine if you qualify to buy the property. But when we're into commercial space and we're looking for 5 units or more, they're interested in the business qualifying. Does the business function as a property with the right debt coverage ratio to be able to support it? Can you talk about that a little bit?
Yeah, I'm happy to, Steve. So, for your viewers as well, guys, when you're buying these businesses or these buildings, it is a business at the end of the day. So, one of the things that lenders look for is they also want to understand, does this building generate enough operating income to sustain the ability to not only operate, but to pay the financing or the mortgage? And that's a critical component. Now, the nice thing is, it's the operational income is what the bank is looking at, and they're no longer interested in your income or your salary from your company, or your, if you're working for yourself, what does that look like? You're still going to be assessed. Don't get me wrong, there's no free rides with lenders, but the revenue stream is really what they're concerned with. And if you hit the right debt ratios, and if different banking institution has different leverages, that's probably another topic we could talk about on another time.
Yeah.
But the idea is that they have certain metrics. Once you hit the metric, it means that you're going to be able to get the financing. And you could even determine that even before you talk to a lender. Simply because once you understand how it works, you can see where this building is going to be landing at. And to your point, Steve, you got to make sure the seller gives you the information, because if those information turn out to be incorrect or you have to redo, it's going to delay you. But if the business is able to basically pay the financing and pay for the operational expenses, you'll get the funding. And in the Canadian market, you have government incentives as well of financing specifically for 5 plus doors. In the US, Fannie Mae, a bunch of other lending institutions as well that does the same thing. They help you provide, because across North America, guys, there is a housing shortage. There are
Mhm.
need for a lot of homes. I know some people are saying, well, why is the condo market crashing if that's happening? That's a different situation or bubble. But in terms of providing apartments or great quality apartments for people, that's where it makes a difference, because the government is behind you to help provide that. Not everybody can afford the high price houses across most of the Canadian market, and
Mhm.
they recognize that. So therefore, there is the incentive to get into there. And more, I mean, across North America, a renter's nation is kind of like the direction we're going in, but it's not a slang. It's not meant to be negative. It's really, this is the way we live, and this is the apartments that you have. And I can tell you, the quality and caliber of apartments now is absolutely incredible. Absolutely incredible. Look, we have a building. It's a mixed use building, but the apartments are loft style. Like, you come in, the main floor, beautiful kitchen, gas stoves, high end living area, and then you take a stairs and you go up to the upper level to get your 2 bedroom bathroom. There's rooftop patio. Like, that is a whole different level of housing, and it's a rental unit
Yeah.
for
Yeah.
the right client, right?
For the right client.
And yeah, and then you have this government that just won the election. They're talking very much about building prefab homes so that they can build cheaper and build faster for the tenants that need that lower income support. So across the board, there's different levels and layers of apartments that are available to people, and it is a good way of living. Like there is nothing that's making it look, oh, we shouldn't be a renter. No, it's a renter's nation.
Yeah.
Not USA, same thing. Some people, that's all they want to do because again, in their philosophy, it's like it's affordable. It gives them their lifestyle that they need because they're not paying out the kind of mortgage payments you got to pay.
Yeah.
As we've been seeing in the last 2 years with the Canadian market as well, where it's just jumping up significantly because here you have every 5 years, 3 years, whatever, you have to go and renew. In the US, if you're buying mortgages, you can run a 30-year mortgage, like
Yeah.
same fixed rate. So
That's
different
crazy.
game, even though it's not American. So financing can be complex, Steve, but I guess what I wanted to support you in saying you are right. This is the building qualifying based on its income. And once it qualifies, you can calculate that and you would know whether you'd be interested in that building or not because you can repeat that over and over and over and over again.
Yeah. And why multifamily? Well, these are all the reasons. It's absolutely on point. Mitch,
Absolutely.
it's great talking with you again. I've really missed you. Now, one of the things I think it's important to ask every one of my guests is to understand their why. And I remember being in a room with 200, 300, 500 other people where you were drilling into the seven layers of why you
Yes.
really want to do this. I have been waiting for the opportunity to ask you, what is your why?
That was quite an experience, Steve. Good memory for sure.
Hmm.
For me, I come from humble beginnings. And I've been able to grow and live a life that's just been incredible. And it's because people helped me along the way. And for me, coaching, teaching, that's something that I really enjoy giving. So my why is to help people come along so that we can go on the journey of real estate investing and wealth creation together. I really believe a community is the way you move forward. And so a big piece of my why is, I want to be progressive. I want to be moving forward. I don't want to go backwards ever again. I always want to have to live a life of prosperity, but I want it around a community of people.
I love this. I love it. Mitch, if people want to reach out to you, how do they find you?
I am all over the social media network. Just check out Mitch Parmasar. At any point in time, Instagram, Facebook, YouTube as well. Mitch Parmasar podcast or the Pineapple Podcast with Mitch Parmasar. I'm there as well. So check me out at any point in time, or connect with Steve.
There you go. I love it. Thanks so much, Mitch. Bye, everybody.
Goodbye, everybody. Thanks again, Steve. All the best.